Did you know that passive fixed income ETFs only capture about 50% of the U.S. public bond market? But with JP Morgan Asset Management's active fixed income ETFs, we can help you capture 100% of the U.S. public bond market and explore twice as many opportunities. Visit jpmorgan.com/getactive to learn more. JP Morgan Asset Management is the brand name for the asset management business of JP Morgan Chase & Co. and its affiliates worldwide. This communication is issued by JP Morgan Distribution Services Incorporated, member of FINRA.
Hiscox Small Business Insurance knows there is no business like your business. Across America, over 600,000 small businesses, from accountants and architects to photographers and yoga instructors, look to Hiscox Insurance for protection. Find flexible coverage that adapts to the needs of your small business with a fast, easy online quote at hiscox.com. That's HISCOX.com. There's no business like small business. Hiscox Small Business Insurance.
So, have you heard the story about the prescription plan with savings automatically built in? It's where a family of any size can feel confident the cost of their medication won't hold them back. Go to cmk.co/stories to learn how CVS Caremark helps members save just by being members. That's cmk.co/stories.
Bloomberg Audio Studios. Podcasts, radio, news.
This is Bloomberg Daybreak Weekend, our global look at the top stories in the coming week from our Daybreak anchors all around the world. Straight ahead on the program, a look ahead to earnings from chip giant Nvidia and some of America's biggest retailers. I'm Nathan Hager in Washington.
I'm Caroline Hepker here in London, where we're looking ahead to the European Business Summit.
I'm Doug Krisner, looking at an expected pivot in Japan's economic growth.
That's all straight ahead on Bloomberg Daybreak Weekend. On Bloomberg 1130 New York, Bloomberg 99.1 Washington, D.C., Bloomberg 92.9 Boston, DAB Digital Radio London, Sirius XM 121, and around the world on BloombergRadio.com and the Bloomberg Business app.
Good day to you. I'm Nathan Hager. We begin today's program with earnings. Third quarter reporting season's coming close to an end, but before it does, we are about to hear from some heavyweights, including the most valuable company of all. AI chip giant Nvidia wraps up results from the Magnificent Seven after the close of trade this Wednesday. For more on what we can expect, we're joined by Kunjan Sabani, senior semiconductor analyst for Bloomberg Intelligence. Kunjan, it's great to have you with us on the weekend program, and it seems like every quarter the expectation is for Nvidia to more than beat expectations. How high is the bar this time around?
Yeah, so just to add some context, the last two quarters were the only quarters in which they did not beat and raise significantly after having beating and raising for almost 8 to 10 quarters before that consistently in a row. The key factors last two quarters were the headwind from the China revenues. Also, not all the street estimates had China removed, so the consensus was not really clean. However, looking into fiscal 3Q, we now believe street has most of the China revenues removed, so that's out of the way. And now we believe NVIDIA's latest Blackwell 300 is ramping stronger. So they could return to their normal raise cadence of mid-single digit beats and raises. And anything above that or a low double digit would be a significant upside that could really help the sentiment. Another point to add here is most of the hyperscalers and cloud providers did raise their second half 2025 CapEx projections by about a total of $20 billion. And their 2026 projections by about $100 billion. So that combined with the $500 billion pipeline that Genshin shared during GTC last month for their Blackwell and Rubin ramps significantly sets it up for a massive upside in 26.
To the point of getting some of that China revenue off the books, we have seen the CEO, Jensen Huang, making moves like improving ties with Taiwan. He was just there doing the relationship with Taiwan Semiconductor. How do you see Jensen Huang building these relationships, and how could that play into the results?
I mean, Taiwan is a key, manufacturing hub, not just for Nvidia, but for most of the established semiconductor semis. Nvidia is also leading TSMC's move of onshoring and building its products into the US in the Arizona plant. So that's going to be significantly critical. On the China point, it doesn't seem like there is enough clearance yet. Of course, they're going to try because there's the second largest market for them outside of the US, and they would really like to capture that market. So far, we don't believe this quarter will see any material revenues, though.
Are those barriers in China a continued headwind beyond this quarter for Nvidia?
They will, but on the good side, most of the investors in the street now have sort of baked that in that, they're not adding this back anytime soon. Also, since the headwind has come up, China right now is about $50 billion accelerator market, right? There have been other larger and other large markets that have appeared in terms of sovereign AI spendings. One is the Middle East region, other is Japan, and more countries, like for example in Europe, are coming in, which could easily offset that TAM that China headwind took out of Nvidia.
I wonder what you're expecting to hear from the CEO himself after we heard in recent days from the CEO of NVIDIA's maybe closest competitor, Advanced Micro Devices, talking about a big revenue outlook for AMD over the next 3 to 5 years. What does Jensen Huang need to say in terms of NVIDIA's outlook?
Yeah, and in his normal way, I think he's going to give more updates of how strong the demand is, how strong the use case and performance benchmarks of the new Blackwell ramp is. What we would like to ask, if we as key or investors should know, is going to be more clarity on that $500 billion pipeline. That could really set up the models and the estimates to go up. Another key point is getting clarity on the gross margin trajectory as these new products ramp, and if they will be staying close to in 26 to the mid 70% gross margin range.
In terms of those newer products, what are you expecting on the pipeline beyond Blackwell?
Yeah, I mean, they have clearly laid out their roadmaps. So the next product, the Rubin, we don't think they'll announce much details for this 3Q, but we will get more clarity in the GTC early part of next year. That's when we'll get a lot more specs. But again, what we have seen from our channel checks is the Blackwell Ultra, the GB300, seems to have gotten much stronger traction than we had anticipated. And so unless we don't run into any transition pains going to Rubin, we expect a similar, stronger traction.
Of course, one of the issues that has long been an issue for NVIDIA, something it's tried to meet the challenge of, is just keeping up with this robust demand for chips and AI centers. Do you see NVIDIA keeping up?
They have been incrementally increasing supply every quarter, but we still think, demand continues to stay ahead of supply, and we don't think supply will exceed demand anytime soon, not at least until 2026 end.
All right. Kunjan Sabani, thank you for this. That's Bloomberg Intelligence Senior Semiconductor Analyst Kunjan Sabani. Again, we get those NVIDIA results after the close of trading on Wednesday. Now let's get to earnings from some of America's biggest retailers. Target opens up its third quarter books before the opening bell on Wednesday. Then about 24 hours after that, we hear from Walmart. Let's hear now from Jen Bartashis. She's a senior analyst for retail staples and packaged foods at Bloomberg Intelligence. It's great to have you with us on the program, Jen. And of course, we look to both these companies for a read on the consumer. Of course, a look ahead to the holidays. What's the setup as we await these results from Target and Walmart?
It's a very interesting time for these retailers because we hear about the disparity in consumer shopping behavior. On one hand, Walmart is pulling more higher income households into its ecosphere than ever before. And on the other hand, we have Target that's going through a huge reset as it's trying to reconnect with its core customer base. And so it's a very dynamic time for these companies, and it's the back to school season is what's really in this quarter. So it's a good read on how people are going to be entering into the holiday shopping period.
Okay, so let's start off with Target. Of course, in your latest note, one of your latest notes, you make note of their goal to add $15 billion in revenue over the next 5 years. Could this be a quarter where we start to see them on their way there?
Well, I think it's going to be a little bit of a mixed quarter for Target. And that's really because they're still trying to find their footing in what's going to resonate with customers. Target is its best when people are willing to buy apparel and buy discretionary items. And that willingness is still a little bit dampened. They've done some good things this quarter to kind of help reset their business. If you remember, they announced job cuts of almost 1,800 positions that they were cutting. That's the beginning of what should be a turnaround for Target.
And it's interesting. We just heard some reports earlier this week that Target is implementing a new greeting policy for those workers who are still on the job, basically telling them to smile more for the customers who come in. What's the balancing act for Target as it tries to navigate this turnaround?
Yeah, I think it's a balance between not losing sight of your own core values that is what makes your customer base love you, and trying to chase other retailers. So, they keep doing price cuts. They want to stay price competitive, but at the same time, Target has never been about being the low price leader. So there's a balance there between having the selection and the fun type of offerings that they have, while still offering value so that people feel like they're getting their money's worth. And that's where Target's really trying to focus on regaining its footing. Yeah,
on the point of the price cuts, we just recently heard that Target's cut the prices on 3,000 essential items. Is that the kind of thing that could eat into its margins?
It could. It depends on what items they are. For the most part, these are going to be more of your day-to-day household items. And those items don't carry a whole lot of margin on them anyway. So when you cut the prices on those, you become a little bit more competitive. The goal always is that you prompt people to buy greater volume, and that makes up for any kind of discrepancy you might have from lowering your prices. But we'll see if that actually takes hold or not. And so the higher margin areas of the store are things like apparel. It's things like beauty. It's things like home decor. And those are the areas that just aren't selling as well right now.
Of course, Walmart getting ready to report their earnings as well. They've made their name on low prices. Is Target potentially eating into what we could get from Walmart this quarter?
I would say that usually on a price basis, Walmart is a clear winner and a clear leader. And for people who shop based only on price, I don't think you'll see a whole lot of shifting between Walmart and Target in terms of customer visits. It's really more about the overall perception and value perception of what you have. So for Walmart, what underpins a lot of their success is the size of their grocery business. Because more than 50% of their revenue in the US comes from grocery type items. And so when they keep prices low there, they bring people in, but then they're shopping the rest of the store. And so I think that's one of the tactics that we'll see. And it's part of what's bringing higher income households into Walmart as well. Because if you're going to buy a box of Cheerios, why wouldn't you buy that at the lowest price? Because it's the same box of Cheerios no matter what retailer you go to.
Well, there's certainly a lot to keep an eye on as we get ready for those big box retail earnings later this week. Thank you so much for this, Jen. Really great having you on with us. That's Jen Bartashis, Bloomberg Intelligence Senior Analyst for Retail Staples and Packaged Food. And coming up on Bloomberg Daybreak Weekend, we'll look ahead to the European Business Summit. I'm Nathan Hager, and this is Bloomberg.
Is passive investing costing you more than you think? Active ETFs aim to beat the benchmark, while passive ETFs just settle for them. Embrace an active strategy that helps you build stronger portfolios. Invest with a global leader in active fixed income ETFs with JP Morgan Asset Management. Visit jpmorgan.com/getactive to learn more. JP Morgan Asset Management is the brand name for the asset management business of JP Morgan Chase & Co. and its affiliates worldwide. This communication is issued by JP Morgan Distribution Services Incorporated, member of FINRA.
From providing extra support during busy seasons to replacing vacant roles, you need Express employment professionals on your team. Express can handle everything from contract placements to finding the right full-time team member. Solve your workforce challenges when you let Express deal with the workers' compensation, payroll, benefits, and more, so you can concentrate on what really matters, growing your business. Go to expresspros.com. If you've never used a staffing company, here's how Express has helped businesses like yours to balance their workforce to meet production demands, reduce stress and burnout, which reduces turnover, access a local talent pool ready to work. For all types of jobs and a variety of reasons, choosing Express Employment Professionals is the move to make this year. With more than 870 locations, find the one near you at expresspros.com. That's expresspros.com.
The world is buzzing with AI tools, but instead of making things easier, they've made things overwhelming. There's a better way. Meet Superhuman, the AI productivity suite that gives you superpowers so you can outsmart the work chaos. With Grammarly, Mail, and Coda working together, you get proactive help across your workflow, no matter how you work. Experience AI that meets you right where you are. Unleash your superhuman potential today. Learn more at superhuman.com/podcast. That's superhuman.com/podcast.
This is Bloomberg Daybreak Weekend, our global look ahead at the top stories for investors in the coming week. I'm Nathan Hager in Washington. Up later in our program, we look ahead to some key economic data in Japan. But first, the challenges facing Europe are unprecedented but clear. A belligerent Russia, frictions with China, and ongoing trade spats with the U.S., even if the impact from Trump tariffs faded faster than expected. The task is building Europe's resilience and competitiveness. That's the backdrop to the European Business Summit, which gathers Brussels' top bureaucrats and policymakers every year. Let's get more from Bloomberg Daybreak Europe anchor Caroline Hepker in London.
Nathan, the European Business Summit in the next few days in Brussels will play host to captains of European industry, Nobel Prize-winning economists and top bureaucrats, including the EU Commission President Ursula von der Leyen. It comes as European firms grapple with high debt costs, energy reliance, strained relations with China and the US, and criticism ongoing of its regulatory environment. The EU's Justice Commissioner, Michael McGrath, says that Brussels needs more power to enforce consumer protection standards amid investigations into illegal products being sold by Chinese e-commerce platform Shein. He says that relations with China can be challenging.
We have a trading relationship at the moment that is quite unbalanced in favour of China. So that's why issues like market access barriers for European companies within the Chinese market is a key issue for us. China is a partner, but also a systemic rival and indeed a competitor of the European Union.
That was Michael McGrath, EU Commissioner for Democracy, Justice and the Rule of Law, as well as Consumer Protection, speaking there to Bloomberg Radio. Well, joining us now is Bloomberg's Brussels Bureau Chief, Suzanne Lynch. Suzanne, great to speak to you. Just give us a sense of this gathering and what business and policymakers are focused on right now in Brussels.
Yeah, look, this is a significant moment for business representatives to come into close contact, if you like, with some of the big hitting EU policymakers in Brussels. The reality is the EU, everyone thinks politics, it in fact, is one of the world's biggest regulators, does have impact on business. And I think this year in particular, people would be very interested to hear what's coming out of the European Commission, because there is such a focus, particularly I'd say over the last year or so, on the challenges facing the European economy and the whole issue of EU competitiveness.
Yeah, indeed. And this summit talks about what choices Europe must make today to remain resilient and globally competitive tomorrow. I think that kind of neatly sums up the issues for Europe. It's well over a year since Mario Draghi's report, which exposed Europe's need for greater competitiveness, the discussion around high energy costs and reliance on bank loans and the regulatory burden and so many other of the recommendations. But more than a year since that report, and even his own upsum that was quite negative about the progress that Europe had made, where are we?
Absolutely. Mario Draghi was speaking himself recently on the anniversary of this landmark report and made the point that there has been very little progress. Now, one reason is because the EU is this very unique institution. It includes 27 countries. It's not a sovereign body that can make decisions. It means that decision making is very laborious. You have to have people on board. You can't just plough through on different issues. And what the European Commission, which is the main executive arm of the EU, what you're hearing a bit from them is, look, we want to, for example, advance more cross-border mergers. We want to develop the banking union. But when it comes to it and the negotiation starts, EU member states, EU countries, sometimes just don't want to play the game. They are worried about their own national industries, their own national companies, and they are reluctant to, take that step forward for more integration. So this has always been a bind for the EU. How do you advance? How do you integrate more when you've got all these different countries with different priorities? But I do think there is a real awareness that the Draghi report is something that did impact, that did break through. I think a lot of the listeners may have been at Davos this year. I remember myself being there and hearing it. This report by a former ECB president had everyone talking and realising that now something needs to be done. The reality is that Europe has been diverging from the United States since the great financial crisis. You can see that in the banking sector. You can see that in terms of innovation. You can see that in the number of startups. And in fact, the real problem, which is scaling up European businesses, that is really an issue. And it does look like it's continuing to lag behind on that.
Do you get any sense that things are speeding up when there are so many pressures? Namely, let's look to China first, managing that relationship, supply chains and rare earths, which is from years and years of movement by Beijing has suddenly become so essential everywhere else.
Yeah, I mean, I think the issue facing Europe now is that on the one hand, you've got this increasingly isolationist United States, and on the other hand, you've got an increasingly belligerent, some would say, China. And the EU is belatedly waking up to the fact that not only has it built up a dependency on the United States, particularly in terms of the defence sector, but it also has built up a dependency on China, particularly for the rare earths material. Now, this isn't just a Europe-wide problem, but you now can see the European Commission realising this. So a couple of weeks ago at the Berlin Global Dialogue, we were there for Bloomberg, and European Commission President Ursula von der Leyen gave a very strong speech where she directly addressed this issue about coming from Beijing, about the rare earths. And she, said that the EU has got options. But the reality is, how much leverage does the EU have here? It really has more than 90% of these magnets that are going into everything from electric vehicles to defence are coming from China. It's now scrambling elsewhere to try and find like-minded partners, but so is the United States and everyone else. So will the EU have that urgency? Like, the EU does not move quick as an institution, that's for sure. So, will it be able to garner its resources and make sure it's there at the table when countries across the world are trying to negotiate and trying to look at different alliances and different relationships? That's one of the key challenges.
Yeah, indeed. And we know the kind of lack of mines that there are actually in Europe for those rare earths in and of itself. And it takes years to kind of to deliver those sorts of mines, and they're also quite polluting as well. So it's a very, very difficult challenge, isn't it?
And I mean, we saw in the last few weeks that particularly German factories, were slowing down their production because they had these supply chain issues. But really, what's worrying, I think, for the EU, we were reporting last week that there were some Chinese officials in Brussels for negotiations, but really the EU wasn't making that much progress, it seems. Now, let's see how this works out in the next few weeks. But with the big focus being on Trump and Xi, where does the EU sit? It's kind of difficult for it to make its own voice heard.
Yeah, indeed. And it's not just China, obviously, that European businesses have to keep an eye on. It's also the White House's stance towards Europe. And there, too, there are lots of challenges. I mean, you mentioned Ursula von der Leyen and her strong speech a couple of weeks ago, but it was that meeting, wasn't it, between Trump and von der Leyen? I mean, forgive me, I just remember the flowers that were between Trump and von der Leyen that seemed to speak volumes of the kind of gap between the two of them, maybe the fact that they didn't want von der Leyen and Trump to be right next to each other. And it was also a moment where there was some criticism for von der Leyen and how she handled it.
There certainly was. I myself actually was at Turnberry for that event during the summer, yes, because it happened very quickly. You know, we forget this with international diplomacy, that no one really expected this meeting to happen, and then it did. And even the optics of Ursula von der Leyen flying to Donald Trump's golf course in Scotland, and part of not in the EU, and making that trip over specially to see him. So yes, the EU came under a lot of criticism from EU countries in particular, saying it could have got a better deal. It locked in a 15% tariff rate. It also, not everything, but it also got some exemptions. For example, there were lots of worries about the pharmaceutical sector. A lot of exporters in Germany, Ireland, etc., Denmark, how would they be affected? They did get a deal on that. But again, this is where the different bits of the EU kind of blame each other. Von der Leyen and the Commission were saying privately, really, well, hang on, you know, we did these negotiations with the backing of the EU countries, and if they had had an issue, they could have shouted stop. But I do think there is a kind of a wider statement to be made about this, and that is the fact that the EU has always prided itself on being, you know, this global trading power, that the single market, that market of 450 million people, that integrated market is its big power, that it's a big calling card. And yet, when it came to it, it didn't have a strong hand with Trump. It felt like it had to really compromise there. And I think that's been a real worry for the EU. Already, as we know, there's been so much inward looking about the lack of strategic autonomy, as the phrase goes, when it comes to defence spending. You know, trade was something they thought this is what the EU does well, and yet it still had to kind of, some people would say capitulate, others would say be pragmatic, but negotiate with Trump, where it did end up with extra tariffs.
And so where do you think that leaves the regulatory environment? Because that, as you say, is what businesses are also focused on. Is there a watering down? Is there adjustment that is being made in the face of some quite pointed demands from the US?
Yes. So I think there has been a change here, actually. I mean, it's one of the ironies of Brexit. Britain was always one of the strongest voices criticising over EU regulation. And in fact, that really did feed into the Brexit debate in London, in the UK. But actually, since Britain has left the EU, actually, in the last year or two, there has been an awareness and acceptance by the EU that it does need to do something about regulation. They're calling it better regulation or simplification. But really what it means is changing some of the rules, watering down some of these regulations to be more business friendly. So the second von der Leyen Commission, she put this simplification at the top of her agenda. So we had, again, Brussels is a great place for acronyms, but these omnibus bills that were brought in earlier in the year. Now, these things take time to go through the EU system. They have to go through the Parliament. There are changes and tweaks. But really, they are about making sure that some of the reporting requirements are less onerous. So we are going to see some kind of watering down of these, but it still has to be really negotiated, the fine-tuning. And we are getting pushback from some of the more left-leaning groups in the European Parliament and MEPs who, for example, feel strongly about climate change, and they're saying, hang on, we can't water down too much. So I think we are going to see this simplification agenda coming through.
Thank you so much, Suzanne Lynch, for being with us. I'm Caroline Hepker here in London. You can catch us every weekday morning for Bloomberg Daybreak here beginning at 6 a.m. in London. That's 1 a.m. on Wall Street. Nathan.
Thanks, Caroline. And coming up on Bloomberg Daybreak Weekend, we'll take a look at Japan's economy and some key data ahead. I'm Nathan Hager, and this is Bloomberg.
From providing extra support during busy seasons to replacing vacant roles, you need Express employment professionals on your team. Express can handle everything from contract placements to finding the right full-time team member. Solve your workforce challenges when you let Express deal with the workers' compensation, payroll, benefits, and more, so you can concentrate on what really matters, growing your business. Go to expresspros.com. If you've never used a staffing company, here's how Express has helped businesses like yours to balance their workforce to meet production demands, reduce stress and burnout, which reduces turnover, access a local talent pool ready to work. For all types of jobs and a variety of reasons, choosing Express employment professionals is the move to make this year. With more than 870 locations, find the one near you at expresspros.com. That's expresspros.com.
Innovation is what gets your business to market, and Wasabi is designed to give every business a shot at competition. How? Break free from skyrocketing storage costs and unpredictable egress fees from old and top-heavy legacy providers. You know, the big guys. Wasabi is the world's hottest cloud storage company and the go-to provider for professional and collegiate sports teams and leagues around the world. And here's why. Innovation. From Wasabi's AI-enabled intelligent media storage Wasabi Air to the industry's only cloud storage service with triple protection against cyber criminals, data deletion, and ransomware, the world's top companies trust Wasabi. Remember, Wasabi is up to 80% less than market competition and doesn't charge a cent for businesses to access their own data. Wasabi, another championship story. Check them out for free at wasabi.com. Wasabi Hot Cloud Storage, proud partner of iHeart Podcast Network.
This is Jason Tim from Hoops Tonight. Toyota is moving toward a more sustainable future by giving you the freedom to choose from an incredible lineup of trucks, now available in both gas and hybrid models, including the legendary Tacoma and powerful Tundra, both available with the iForce Max hybrid powertrain and backed by Toyota's legendary reputation for reliability and value. In fact, for 2025, Toyota is the best resale value brand for the 5th year in a row, according to Kelley Blue Book's KBB.com, with Tacoma ranked number 1, holding the highest projected retained value of any vehicle. Choosing Toyota means having more options and less compromise. So visit buyatoyota.com for a great deal on an efficient Toyota today. Vehicle's projected resale value is specific to the 2025 model year. For more information, visit Kelley Blue Book's KBB.com. Toyota, let's go places.
This is Bloomberg Daybreak Weekend, our global look ahead at the top stories for investors in the coming week. I'm Nathan Hager in Washington. We go to Japan next, where the economy likely shrank in the latest quarter. For more, let's get to the host of the Daybreak Asia podcast, Doug Krisner.
Nathan, on Monday in Japan, the government will report on third quarter economic growth. A contraction in GDP is expected for the first time in 6 quarters. Yes, there have been signs of positivity recently to suggest that Japan may have been able to shake off its lost decades. The stock market very near record highs. Inflation is firmly in place, and that will allow the Bank of Japan at some point to continue normalizing policy. But clearly, something has gone missing, and now Japan's new prime minister is pushing for aggressive fiscal stimulus. To help us understand more about the state of the Japanese economy, I'm joined by Bloomberg's Paul Jackson. He covers the economies of both Japan and South Korea. He joins us from Tokyo. If you had to identify a single culprit responsible for this weakness, as difficult as it may be, where would you point?
I think there's going to be a hefty fall in this third quarter. Part of it is to do with Donald Trump and his tariffs. Now, why is that? It's because in the previous quarter, there was a lot of front loading of exports to try and beat the rise in tariffs. Now we get into the following quarter, you've already used up some of that export power in the previous quarter. So that's going to be one of the key factors that explains this big drop that we're expecting in third quarter GDP. There are some other factors, though, Doug. We did have a technical element to do with housing. There were some environmental regulations brought in earlier in the year that's going to make new housing more expensive. So there was a bit of a rush on house buying, and so that's also kind of stolen some of the later demand, pulled it earlier in the year.
Certain areas of the economy, I'm thinking of the manufacturers that do a lot of exporting to not only the United States, but other parts of the world. Cars, automobile parts, steel. Are there other industries that have been severely impacted by these tariffs that are providing more of a drag on the export side?
Well, I think you've mentioned the key ones there. Of course, with these reciprocal tariffs are affecting exports right across the board. The cars, obviously, that was the key part of the negotiations. They're down to 15%. And what's interesting is that the car exporters are absorbing a lot of that tariff. Now, normally you would expect about a third from the exporters, a third from the importers, and then maybe a third from the consumers. But what we're seeing in the figures is that the Japan car makers are lowering their prices by more than a third of what the tariff side would be. So that's eating into their profits. But I don't think we need to quite sound the alarm bells now because of those technical factors. So it's one of those contractions that maybe looks worse than it is. That's not to say there aren't ongoing problems with the economy. I think obviously we need to see how trade responds to these higher levels of tariffs, and also whether the U.S. economy can keep expanding. Obviously, it's a huge engine for global growth. Looking at Japan's economy more domestically, it's a case of whether consumption can keep holding up in this new environment of inflation, which households haven't been used to.
Indeed, this has been a remarkable shift after multiple decades of deflation, how a generation in Japan has not known upward pressure on prices. There's also been, as you know, Paul, a bit of skepticism that inflation will prove to be durable. Now, you mentioned the upcoming meeting of the BOJ in December. A number of economists surveyed by Bloomberg have said the Bank of Japan should hike rates. So let me ask you, Paul, about the likelihood of an interest rate hike at the next meeting.
Well, Doug, I mean, the usual response is you've got inflation above target for more than 3.5 years. I mean, you'd be raising interest rates. It'd be a bit of a no-brainer. But because of this kind of national goal of trying to generate inflation, they've been going very, very slowly. Given that the consumers are still kind of getting used to the idea of inflation and wrestling with rising prices, there's a bit of a fear that going too fast on raising the interest rates could upend the economy. Now, we have a new prime minister in, Sanae Takaichi. She's very much of the kind of Abenomics reflationist mold. Mm-hmm. She wants to, ramp up fiscal spending and provide support to consumers. So, in a sense, this contraction in GDP, although it might be slightly overstating, the weakness in Japan's economy, it's very useful for a politician to have that figure come out just before you want to unleash your economic package as the new prime minister. And of course, an economic package is a very, it's a tried and tested approach for new prime ministers to bump up their support when they come in.
So there are a couple of things that I want to consider. One is the currency, because we know the yen, particularly weighted against the dollar, has been weak. I think right now we're trading around 154. Obviously, in a scenario where you have a weak currency, you're importing inflation, and energy, I know, is a big component of that where Japan is concerned. But the other thing that I'm curious about, wages. Why do we deal with the yen portion first, though? Help me understand if that is kind of getting a lot of the blame for this stubborn inflation story.
It is getting a lot of the blame. Again, you could argue that if the BOJ raised interest rates, that would help lift the yen against the dollar and ease some of that pressure. The thing is Takaichi, being from the kind of Abenomics mold, she kind of wants the BOJ to go slow because she wants to emphasize growth in the economy before anything that might constrain growth, such as interest rate hike. Mm-hmm. So really, the difficulty here is wanting to expand growth, push on it, using a weak yen to help those exporters. But you've got to rein it in at some point, because if you have too much currency weakness, then you're going to have to intervene to prop up the yen. And you mentioned that currency rate around, 154, 155. I mean, I think once we get into the 155 to 160 range, then we really are stretching the limits of what's acceptable in terms of weakness of the currency.
Okay, so let's talk about the wage component right now as it feeds into the inflation narrative there. How are wages right now relative, let's say, to where they were 5 years ago? Are much appreciated?
I think in terms of your full-time worker in a regular job, discounting kind of all bonuses and overtime, wages are going up around 2.2, 2.3% year on year. Now, that is actually pretty solid growth for Japan compared with the past. Don't forget, in Japan, there's been this social compact between workers and companies to sacrifice wage hikes in favor of job security. And unemployment is very low in Japan compared with other G7 economies. But obviously, if you've got inflation, then people start to realize, hey, wait a minute, or 2.2% sounds pretty good. But if your inflation is higher than that, which it is, then essentially your purchasing power is getting weaker and weaker and weaker. One of the factors that certainly is very important for the Bank of Japan and other policymakers is, can these wage gains go above the inflation rate? If they do, then it's a no-brainer for the Bank of Japan to keep going ahead with normalization and raising interest rates.
Let's talk a little bit about what Prime Minister Takaichi wants to do in terms of stimulating the economy. Has there been any discussion around the areas of focus, positions that she would obviously take to try to stimulate activity?
This feeds into this point of she's got to play a kind of careful line between providing help so that consumers and voters think that she's listening to them about their cost of living crunch concerns. So that means probably she's going to be helping subsidize electricity bills, subsidizing natural gas bills, reducing taxes on gasoline, doing things that consumers can immediately recognize. There's also a talk of including in the package kind of shopping tokens that you can spend, which will help regional economies. Regional governments will be given quite a bit of leeway by the looks of things to offer kind of incentive spending tokens to consumers in their areas. So those are things you can do. But you kind of offer too much stimulus to the economy, what are you going to get? Well, you're going to get more inflation, which creates more of the problem. So there's a fine balancing act she's got to do there. Other things that we're expecting out of this package are she's wanting to spur long-term growth, and she's identified 17 areas that require more investment. So she's trying to give tax breaks to companies that invest in these areas. And these are kind of areas that you would expect are important for economic security. Chips, chip making, anything that goes into rare earths, this kind of stuff.
Paul, I'm curious to get your take on the level of public debt in Japan and whether it's a concern. I mean, we know it remains more than twice the size of the economy. I'm curious as to how it's being viewed, or perhaps there's a tendency now to ignore it entirely.
Well, what I think we're seeing here, Doug, is a bit of a sea change in the way that Japan's fiscal policy needs to be weighed up against fiscal discipline. In recent days, the Prime Minister has essentially said that balancing the budget on an annual basis, this is after debt servicing sorted out, is no longer going to be their prime yardstick for a kind of fiscal discipline. And what she's saying is we need to support the economy, we need to provide growth, we need an expansive policy, but we do need to be responsible on the fiscal side. But our yardstick should not be balancing the budget. Our yardstick should be debt measured against GDP. Now, those figures do not look good, Doug. I mean, we're like, 230% or more the size of the economy in terms of Japan's national debts. And so what Takaichi is doing is she's saying, no, don't look at the gross debt against GDP figure. Look at the net debt against GDP figure. Because if you look at those, Japan's got a lot of assets. Then the figures look a lot better. I mean, they're still not great. We're still talking like 130% net debt against GDP. But you're back much closer to the other G7 nations if you use that yardstick.
Paul, we'll leave it there. Thank you so very much. Paul Jackson, he covers the economies of Japan and South Korea from our bureau in Tokyo. I'm Doug Krisner. You can catch us weekdays here for the Daybreak Asia podcast. It's available wherever you get your podcast. Nathan?
Thanks, Doug. And that does it for this edition of Bloomberg Daybreak Weekend. Join us again Monday morning at 5 a.m. Wall Street time for the latest on markets overseas and the news you need to start your day. I'm Nathan Hager. Stay with us. Top stories and global business headlines are coming up right now.
At Hill's Pet Nutrition, we know that pet parent guilt is real. Leaving too long, playing too little. New homes, new babies, waking them up when they look so comfy. Running out of patience, running out of treats. Running the vacuum! You can only do so much. That's why there's Hill's, science-led nutrition to help you give more love than humanly possible. Because you're only human, there's Hill's. Find the right food at hillspet.com/science does more.
Hiring is about people, not just algorithms and online searches. And with more than 870 locations, the people in your local Express Employment Professionals office are ready to support your workforce. Visit expresspros.com. Whether you need contract workers to keep up with changing demands or your next full-time team member, Express has a network of candidates ready to work. Go to expresspros.com to find a location near you. That's expresspros.com.
ABC Wednesday, it's the CMA Awards live.
That's what I'm talking about.
With performances by Lainey Wilson, Kelsey Ballerini, Zach Top, Riley Green, Ella Langley, Kenny Chesney, Megan Maroney, Brandi Carlile, and the hottest collabs, Miranda Lambert and Chris Stapleton, Shabuzi and Stephen Wilson Jr., Big X The Plug featuring Luke Combs. It's country music's biggest night.
Woo! Hosted by your girl, Lainey Wilson.
The CMA Awards live Wednesday, 8/7 Central on ABC and next day on Hulu.